All right, like I said, the main intent of this is to help equip you to create kingdom wealth, right? And so today I'm going to talk about some really important stuff, and I hope that you will be able to take down notes and you will be able to understand and ask questions on this, because this is very important. Okay. So welcome to day 4. It's been a great going so far. We've had 3 tremendous days. I think this day might be the best of all so far. All right. I'm pretty sure that I'm going to enjoy the session. As usual, we have only 30 minutes. And after the 30 minutes are over, we can still keep continuing until the Zoom session closes out automatically. And so today I'm going to talk about goal and strategy. Okay, these are the 2 keywords I want to talk about: goal and strategy. And so the vision of KWC is to create kingdom wealth, right? We're not planning to create ill wealth. We're not planning to create quick wealth. We're not planning to create large wealth. Okay, we are planning to create kingdom wealth. Sometimes kingdom wealth can be large wealth too, but our intent is not to be greedy. If our intent is to be greedy, then that is not kingdom. All right. And so what do you do with kingdom wealth? You will multiply it by giving it to others, giving it unto the Lord, giving it to ministry, and by investing it into yourself, into the markets, into different investments that you have. So 2 critical things that you need to know how to multiply kingdom wealth is to make sure you set goals and have strategies. And so I want you to see, the scripture says that in Judges 7, okay, Gideon divided his 300 men into 3 companies. So he diversified. And Ecclesiastes 11:2 says, invest into 7 or 8 ventures. So again, diversification or diversity is very much on God's mind as a strategy. And we need to implement that in our investments too. Now, if you look at in Genesis, when Joseph interpreted the dream, he later told Pharaoh, he gave wisdom. He told him, you should take a 5th or 20% of the harvest during the next 7 years and store it. And so there was someone giving wisdom, wise counsel. And so these are 2 key elements of strategy. As we go forward, I will explain that. But these are key verses that I want you guys to think about. Okay, now let's look at goals. Okay, what is a goal? A goal is basically a target, right? So my first goal should be how much. Now this how much can be on so many different levels. For example, how much of my total capital should I invest? Personally, I think that's a very flexible amount. There are times when my investment was 100%. There have been times when my investments were 50, 30, 40. Sometimes my needs were a lot, so I would accordingly reduce my investments. Sometimes I wanted to help someone, and so I would take out from my investment. So it can be 100%, it can be 0%, but ideally it should be between 30 to 70% at least. Okay, you should be investing a larger portion of your capital grow. Okay, you should be helping others. You should be spending on yourself and your family, but you should try as much as possible to invest your capital. God is asking you to always multiply, right? Now, how much? So the next how much is how much should I expect on my investment? Should it be 100%? Should it be 30-fold, 60-fold? What is a realistic return on investment that I should look for? And like I said, most, especially when it comes to the equity market, we are looking at somewhere around 12% annually. All right, but it could be higher. If you're looking at a fixed deposit, you're looking at 6% or 7%. So that is what you should be expecting. Okay. How much should I put towards the long term? If you're investing into stocks, how much of it should I put into long-term holdings? How much should I do for intraday? And I will give you my personal thoughts on this as we go into the unrecorded version. The uploaded version of this session won't have all those intimate details. All those intimate details you will receive during the session. All right. So the question there would be is how much should I put towards long term? And I would say normally you should have a significant portion of your investment in long-term holdings, especially right now because the markets are down. This is a good time to get and hold long-term. All right. Now, how much should I put into short-term? I think when it's volatile, when the market is very dicey and there's no clear indicators, I think at that time you should start getting more into short-term intraday and you get into more short-term strategies. Okay. Now, how much should I keep in reserve? This is very important. I will always keep between 10 to 20% of my investments in reserve, where I'm just holding it. I'm not using it to leverage or to buy into stocks, simply because if some really good opportunity comes, I will have the capital in reserve. Usually I keep about 10%. Okay. Now my goal should be daily, monthly, and annual. So when I say daily, what is my target? So I just want you guys to know that I have a daily target. This is how much I am going to try to hold or try to get per day. Now, what happens if I don't get it? I'm okay. What if I exceed? I'm still okay. But I've at least in my mind said this is my daily target. If I kind of exceed my daily target by a lot, I'm going to stop. So that's what happened yesterday. Within 30 minutes, I was done. Okay, I didn't want to do anything more. And then the only other trade I did was to basically try to hold a stock which hit its short stop loss. But I always have a daily target. I have a monthly target. And this is basically how much do I want to earn from my investments in a month. And I'm not going to exceed that. For example, the stock market is online roughly 20 days in a month. So if I have a daily target, my monthly target would probably be that into 20. You see, that's simple. So I want you guys to think out what is your daily target, what's your monthly target, what's your annual target. Okay, and annual targets shouldn't be out of the moon and the sun and the stars. It should be something that is realistic. Every goal should be smart. Okay, it should be specific, it should be measurable, it should be attainable, it should be realistic, and it should be time bound. So annual target should be somewhere, I think 12% to 15% is a good annual target when it comes to the stock market. If you go beyond that, great. Kudos to you. Good job. Well done. But don't get greedy. Set a realistic target. Okay. What happens if you put a target too high? One, you will get frustrated. Second, you will try very hard to get to that target. You will end up losing money sometimes. Okay. You would take a lot of risk. So set a daily goal for your investments. I will tell you what I set. Set a monthly goal for your investments. I will tell you what I set. Set an annual goal for your investments. Again, I will tell you what I said. Okay. Now, strategies. What are the strategies that we use? Again, strategies differ depending on what level you're using it at and what you're thinking about. Okay. For example, my strategy is to diversify, research, and seek wise counsel. If those are three key things I think that I would use. Okay. But each of these have different levels. For example, diversify. I would diversify my holdings. I would have some in the stock market. I would have some into gold. I'd have some into fixed deposits or bonds, and I would have some into property. I'm not going to put all my eggs in one basket. Okay. How much you put in each depends on you. If you're young, I would say invest into the stock market, invest in commodities. These are growth investments. If you're old and retired, I think fixed deposits is the safest thing. Post office and pension schemes and bank deposits are the safest thing for you at that age. You can't go risk everything at that. Okay. Now, even in equity, you need to diversify your equity. You can't have one stock as 100% of your portfolio. You need to divide it among sectors, because there will be some times when some sectors are growing and other sectors are not growing as fast as the other sectors. So you need to diversify to minimize your risk. Every time you diversify, the reason why we diversify is to reduce our risk. Okay. The more eggs you put in one basket, the higher the risk that you face. And so the key and the answer to that is to diversify, flatten the risk. Okay, like we say, flatten the curve right now for coronavirus. You flatten the curve on the risk. Now, you have to look at large caps and mid caps. You can't say, oh, I only want blue chip stocks, or I only want small cap stocks. No, you got to diversify among the cap sizes, the market caps. Some of them are large companies. Some of those are companies that are growing up. Some of those are startups. But I want you to know something. Avoid penny stocks. What I mean by penny stocks or stocks that don't have any fundamental value. Penny stocks are basically stocks that don't have fundamental value or not very good fundamentals, but they just look really nice. Okay, they look really low price. They look really, wow. If I buy this, it's 2 rupees now. What happens if it gets to 2,000? What if it's the next Infosys? Well, studies show that it is very rare for a stock to be the next Infosys. Okay, only 1 out of 2,500 shares would eventually, or companies would eventually become the next Infosys. So you're taking a huge risk on that 2 rupee penny stock. Okay, so penny stocks are stocks that are not fundamentally sound, that are very low price, don't look. You have to look at the fundamentals when you come to purchasing. stocks. Okay, and we will talk about fundamentals maybe tomorrow or Saturday, but just be careful about that. Okay, now diversify your commodities. I know gold. Everybody loves gold. Okay, so I'm pretty sure everybody here, every Malayali family, every Indian family has gold in their holdings. That's good. Nothing wrong with gold. One day we will all have to leave it and go. We can't take it with us to heaven. But gold, yes, it's a good commodity. But there are other precious metals that you can invest in. Anything that you produce. You know, in Kerala we have rubber, and some of us still grow rice in our paddy fields. You know, so we have pepper. So these rubber, pepper, sugar, those are things that you can also invest in on the commodities market. Okay, now diversify your fixed income. You should have term deposits, fixed deposits. Those are the least risk things. So you should have some percentage in it, but you should also have some percentage into tax saving plans, especially if you're paying income tax. Get some tax saving plans involved. Okay, save on that income tax. So you should diversify there also. You should now that is just the ways you diversify your portfolio or investments, but you also have to diversify methods. I know a lot of people who just stay long term in the market. Nothing wrong with that, but they're missing out on potential investments in terms of swing trading or short term and intraday. Okay. If I were you, I would be investing into all of those. All right, and so it is important that we do all of those. You can't just invest into just long term or just intraday. For you how this works personally for me. Okay, I think someone needs to get. All right, so try to diversify your methodology. Okay, long term, short term, or swing trading and intraday. Now, so the methodology is long-term trading, swing trading, intraday trading. You got to get involved in all of those if you can. First, study it. Okay, don't just simply get in. Oh yeah, Sergeant said, I should get into swing trading. So yeah, let me get into swing trading. What I do here? Swing for the sun. No, do your research, plan well, check things out before you get into any of these. But I would say do all three. Don't just do one. Um, Diversify your tactics. For long-term holdings, use fundamentals. Fundamentals are the key for long-term holdings, not news or not technical charts. So those are also important, but long-term holdings is because you value the company. But when it comes to swing trading, fundamentals are good, but I'll be looking at the technical charts. Hey, this is just hitting and bouncing off a level of support. That's when I need to get it. And market news, so intraday is the same, so technical charts, not so much as fundamentals. And then there's market trends for intraday and news. I want you to know, beyond fundamentals and beyond all these technical stuff, sometimes it's just news that moves things. When the coronavirus came out and pandemic started, that was news. There was no fundamentals there. There were fundamentals because everybody was getting affected, but the news itself caused a change in the market situation or in the stock. So make sure you understand this. So what would I do? I would study the fundamentals, I would study the charts, I would look for news. Simple as that. That is how I diversify my tactics for each and every method that I use. All right. Now do your research. This is the second thing when it comes to strategy. You need to be a lifelong learner, whether it's the investment market or whether it's your own life. Okay. Be a lifelong learner. Keep studying, keep learning, keep growing, and make research a lifestyle. You got to ask the questions: why, how, what did happen, what happened here, how did it happen, why did it happen? And this is something that you got to do. If you don't do this, you are not going to succeed in life as much as you could. You might succeed, you probably will succeed, but you probably won't succeed the way you should have to your full potential. And so researching and learning and studying is a key part, especially when it comes to into the stock market. Right. The last thing here is to seek wise counsel. Have good advisors. Ask them for input. Okay. When I started KWC, or when God gave me this thought that I should help others in terms of investments, I asked two of my spiritual leaders and two of my very close business friends. One of them is actually sometimes on this chat. He comes in. Uh, Four people that I asked, and then I asked my very wise and mature wife as well. She's very godly. She's very mature. So there are five people that I spend time talk to bounced off things, ask them questions, ask them for input. What are their suggestions? What are their thoughts? But most of all, I kept asking God. So when it comes to anything in life, especially including investments, seek wise counsel. Please don't go blindly into buying a stock because you think it looks good or its name sounds great. That is Sergeant Tech. Wow, Sergeant Tech, it sounds like me. Mera naam hai. So let me buy. Don't do that. So have good advisors, ask them for input. Now, when I say good advisors, people who are qualified in that thing, who are proficient in that thing. If I were to go ask my spiritual leader about something that he doesn't know anything about, that doesn't make any sense. If I were to go ask my investment banker about how to follow God the best way, he probably wouldn't know. I wouldn't ask him. So be mindful of that. Ask the right people who are really good, proficient, and try to build good relationships with them. Okay, because when you have a good relationship with such a person, they will share their life, and you learn a lot more from their life than all these, you know, uh, you know, the straight questions. They will give you a straight. They will give you a prepared answer if they don't know you, but if they really know you, if you are in a good relationship with them, they will give you heart-to-heart talk. Do that. Okay. So now here's my assignment part. Once this assignment part is done, I'm going to talk to you about what I do personally. But here's the thing. These are questions you need to ask yourself, and you had to plan it out and research. How much of your total capital would you choose to invest? That's a question you got to ask depending on your age, your risk appetite, and all of these situations. Well, what your family thinks, all of those questions have to be answered and thought through before you put that thing answer down. What goals would you set? Are you going to set a realistic goal? Are you going to set a time bound, measurable, attainable, smart goal? Or are you going to put something that's, I want 200%? Okay, so make a goal. What strategies are you going to employ? Are you only going to go for long term? Are you only going for swing? Are you only going for intraday? Are you going to do a mix of those? How much would you allocate to different investments? How much would you allocate to intraday? How much would you allocate to holdings? All of that you got to think through. And the last question: who are your investment advisors? I mean, I wouldn't ask my dog for investment advice because my dog can't talk and she doesn't know anything about investments. I wouldn't ask my pastor for investment advice if he's not involved in investments. He would probably tell me these are the things you have to be careful about based on the Bible. That is good. So that is what he can give you. But he probably wouldn't tell you, hey, you need to look at the TNE, you need to look at the EPS, you need to look at the technical chart, you need to look at the candles, and you need to look at the resistance and the support. No, he's not going to do that. He doesn't know. If he doesn't know that, if he's good at it, great. Then you should ask it. Okay, because then you get both sides. You get the spiritual side and you get the financial side. But if they don't know it, no point. So these are 4 questions you got to ask yourself. Okay, you got to research this, plan it, think it through, put it down. This will help you to be prepared for what you're going to do. If you don't have a goal, if you don't have a vision, you're just going to lose, because the lack of vision causes people to die out or lose out, right? For lack of a vision, people perish, is what the Bible says. And so it is very important to have a vision or a goal for what you're doing, especially when it comes to investments. Okay, so this is the assignment that I'm going to leave you with. Now, I'm going to open it up for Q&A, and I'm going to answer a few of these questions, but then I'm going to get a little personal. It's not going to go up online. I'm going to tell you what I do, show you what I do. And so let's look at some of these questions. Okay. First question was, I would like to know more about the shorting approach. So what happens if the market is bearish? I see that the market is bearish. What I'm going to do is I'm going to short the market or short a share that when I look at the charts, I know that this share is going to go down. Okay, I know for sure that this share is going to go down. I'm going to short sell, which means I don't have the stock in my hand. I haven't bought it yet, but I'm selling it. And so at the end of the day, the aim is to buy it back when the price is much lower, so I make a profit. See, when I sell it at 550 and I buy it back at 520, I've made 30 rupees of profit, right? You sell it at a high price, it goes down, you buy it back. That is short selling. Okay, that is opposite of buying and holding for increase in the price. So that was one question. Now, are holding stocks mainly for dividends? No, some holding stocks look like very high growth stocks. Now, dividends are basically the company saying, hey, we have profits and we want to give you some of those profits. But a high growth company usually doesn't give dividends. It's saying, we've got lots of profit, but we're going to put all this profit back into the company because we want it to grow massively. And so usually mid cap or smaller companies that are growing don't give a lot of dividends because they're still in their growth curve. Now, when they get older and they get more settled, and you know what, hey, now I'm a grandfather, I have grandchildren, I should give them some of my money. But when I'm a young man and I'm just growing, and I have to make sure that I create wealth for my family, I'm not handing out all of my money to my kids as much. You notice that your parents never used to give as much money as they used to give. They wouldn't give you as much money as they do to your children now, right? You used to ask them for an ice cream, they'll say no. Your daughter, your son asks them for an ice cream, they say, yes, please, I want to buy you ice cream. I want to load it down with sugar. Yeah? So that's the issue. You see, that's the issue. So not all stocks are dividend giving stocks, but you can hold stocks because they give dividends or good. See, again, fundamentals are important for holding stocks. So there are some fundamentally sound stocks that give good dividends, hold them. There are some stocks that are fundamentally sound that are growing really well, whose prices will appreciate really well, you hold them. Okay, please explain fundamentals on penny stocks. Penny stocks, simple answer, no fundamentals. They don't make any profit. Their EPS is negative. Their P&E value is very low. When you see P&E value, you think if it's low, it's good. But its market cap is very small. It doesn't, if you read up the news, you'll understand these guys are not doing anything worthwhile. They don't have a clue. They don't have a vision. And the numbers reflect that, they have a lot of debt. So all of those issues can make you understand it's a penny stock. And most of the time, the market realizes that, and the amount that the share has is usually even less than their book value. So the book value is 10, their price might be 5. That tells you that that stock is not trusted a lot. Okay. Now, how long should we hold stocks to get dividends? Basically, dividends are given out once or twice a year, depending on the company. And so you can, the good thing about the dividend is it'll be announced on a particular day that, hey, 1 week from now, we're going to issue dividends. So what happens? People will sometimes go buy the stock so they can get the dividend. As long as you're holding the stock before the dividend date, you will get the dividend. And when the dividend comes, the share price will go down accordingly too, just so you know. Okay. If not dividends, why invest long term? Like I said, if it's a growth, fundamentally sound, growing company, that price is going to appreciate. So if Infosys went from 100 to 2000, not necessarily because they gave dividends, but I would buy the stock because it's fundamentally sound and it has a long-term strategy, a good vision, and it's making a lot of money. So the share price is going to go up. Okay, how to determine the real value of the stock based on fundamentals? Okay, so this depends on sectors, depends on the industry. It might not. It is. There's no one concrete answer, but basically you got to look at this. A good company, it will always be at a certain level, share price above its EPS or its earning per share. A good look is maybe 10. Okay, so if the company is earning 10 rupees per share and its value is like 20 only, the share price, that means it could probably go up to 100. But there are really good companies whose P&E, price to earnings per share, is 40, 50 now. That's because people have bought believing in the company. It's really good. How do we know a company is in debt? Simple. You see, every company is supposed to announce their holdings, announce their financials. It is a regulatory clause. They cannot escape that. So they will put their details, the debt numbers, all of that. If you look it up on any good research site, Money Control, Economic Times, you will see that this stock has this company has this much debt. What's the D/E ratio, the debt to equity ratio? You can see all of that. Okay, so I'm going to take a pause from answering these questions. I'm just going to go and show you some really good stuff that I hope will help you all. Okay, and none of this is going to go up online because it's private stuff. All right. So